Please welcome Semafor Editor-in-Chief, Ben Smith, to lead a discussion on inflation.
Very thrilled that all of you are still here, and to be joined by two great economists who will answer all of our questions on that topic. Jason Furman, who was President Obama's chief economic advisor, and Philipp Carlsson-Szlezak, who is the chief global economist for our partners in this event, BCG. And as I was preparing for this, Jason, the hardest part about interviewing you is that you tweet so much. And so I think, if you want to know what Jason thinks over the last 20 minutes, do check out his Twitter. But I was thinking, because I think you're incredibly good at communicating about economics to your students at Harvard, broadly, from, when you were in the White House. And I'm curious if you feel like what aren't you tweeting about? Like, what's in your drafts that you feel like, do you, because I think that you, at least as I read you, I feel like you're trying to sort of tread a fairly careful path. So I'm curious what, in some sense, yeah, go ahead.
Look, I, had a choice. I mean, to be frank, I had never been in a position where my party was in power and anyone cared what I thought. The last time my party was in power and not in government, and I wasn't in government was 1995, and there was no Twitter, so even if I had a thought, I couldn't get it out there. And I've wrestled with that in the last 2 years, and I've decided the voice I'm happiest with is a voice where I'm telling the truth, but doing it sort of politely. And so, or telling the truth as I see it, I might get things wrong, I'm sure I do. But so if you look at my deleted drafts or the DM chains, there's probably more snarky stuff than make it onto my feed. And I have all sorts of thoughts on politics, but I keep them to myself because no one really cares my views on those topics, and it'll just undermine my credibility on the other ones that I do know a little bit about.
And I'm curious, having, I guess, really followed you closely for a long time, I felt like you, in the early Biden years, at least I thought you were maybe pulling your punches a little, and that you emerged as somebody, with your concerns about inflation emerged kind of fully formed a little later. And I'm curious I don't know if you wish you'd raised those earlier, if you regret that at all.
Yes and yes. I was doing my own efforts and sharing them with whoever would listen as to what I thought the size of the fiscal response should be. I was getting numbers in September of 2021 of about $2 trillion. But then with every passing month, the economy was less bad than people thought. It was still bad, but it was less bad than they thought. And so that number was going down. They ended up passing 2.8 trillion because the December plus the March. And privately, I raised many more concerns than I did publicly. Publicly, I'd sort of go out and say, it's important to do something, which I thought. Maybe this is a bit bigger and it could be retuned and made smaller, which I thought. And it's important to do something. And I didn't emphasize the middle part nearly as much. And I think I learned a lesson from that. I wasn't doing anyone a favor by downplaying my concerns. In fact, maybe the world would have been like at least one tiny little bit better if I had made my concerns clearer. I don't think you do your friends any, and people are talking about inflation being transitory in 2021. I don't think they were doing the Biden administration a favor. It doesn't look good that the president was talking about transitory inflation when it wasn't. To be clear, lots and lots and lots of other people made that mistake too. Financial markets, forecasters, et cetera. So it's not like a unique flaw of the White House, but I don't think it helped that they did that. So I think people warning them, maybe we're doing them a favor, even if it felt bad at the time. Our business editor, Liz Hoffman, often reminds me as a lay observer who is not an economist and shouldn't, attempt to ask sophisticated questions about this stuff. You can really feel the extent to which both, economists, government officials, Wall Street, live in this kind of bubble of conventional wisdom. And that at moments is very gloomy, at moments is very optimistic. Philipp, one of the things that's been interesting reading you is that you have been optimistic when people were optimistic, and then also optimistic when people were pessimistic. And I'm curious, in particular, kind of traveling between Wall Street and Washington, if you feel more or less like an outcast as the House optimist on, I guess, particularly the possibility of a recession.
No, certainly there's something to this. I'm struck by how pervasive negativity is just spending 2-3 days in town compared to
here in Washington.
Yeah, here in Washington, being in New York based, where the Wall Street narrative is a lot more upbeat. In my role, I also speak with the C-suite daily, and from that perspective too, there is more upbeat narrative still in what the cycle has to offer and how long it can persist. So, I still think we're a little too negative on how much resilience the cycle has still in it.
Were today's numbers, how did they inform your point of view?
So, today's print confirmed that we're moving in the right direction. This battle isn't won, but it's tilting in the right direction. And I think the fact that you saw headline drop below core was a stark reminder that while we have disinflation, the quality of disinflation isn't good enough. The easy part is basically what we've seen, core headline inflation coming down, and the much harder part is to see core also decline. And that we haven't seen. So it's not at all over, it's not won, but in my mind, it is certainly confirmation that we're on the right track.
Jason, when you were in the White House, if I sort of recall this correctly, you were an advocate. You were pushing on the notion that the labor market, that there was space for more employment, and a big advocate of domestic manufacturing and of investment in the domestic economy. Maybe I don't want to put words in your mouth.
You got the first one right. The second, I've never really thought manufacturing was particularly different from any other sector.
Let's stick with the first one then. And I'm curious. I don't know if you feel vindication to the extent to which the Biden administration has brought unemployment to these historic lows, or if your view on that has shifted at all.
Look, I think to some degree it's like the completely apocryphal and made-up Zhou Enlai quote about the French Revolution, that it's too soon to tell. If inflation comes back down and we don't have a recession, so we have this proverbial soft landing, I think this will all look quite good. I looked at the jobs numbers last week. I've never been so excited to see the lowest black unemployment rate ever, the prime age employment rate for men and women, that's 25 to 54, higher than it was before the recession. Just an amazing report. If we can sustain that and inflation comes down and has a soft landing, then I think this will look good in retrospect. I'm pretty nervous, though, about what the odds of that soft landing are. I see a lot less progress on inflation than Philipp does, and so I worry that we sort of went from a strategy I thought we should have of putting one log on the fire at a time and making it hotter and hotter and hotter, and instead just threw them all on at once and ran just a pretty crazy experiment that may not turn out well.
There's a policy question embedded in that, as well as just sort of an economic management question around, is there an acceptable level of inflation that is over 3 or over 4 that keeps unemployment very low in the medium long term, and but also that where we live with inflation that's much higher than anyone's used to? Is that, I don't know, how do you make that decision? Because I've heard you sort of float that notion.
I'd say a few things. One is they've said 2 a lot, and if they shift off of 2, what does that mean for their credibility? Now, what does their credibility buy us? Their credibility bought us the ability to do a lot more in response to the last 2 recessions without having to worry much about inflation. Their credibility bought us low interest rates, which, by the way, also helps us with our fiscal situation, which would be, I think, is okay-ish, but would be a disaster if we had much higher interest rates. On a blank slate, would I pick a number like 3 instead of 2? Probably, and I could go through some of the cost-benefit that leads to that thinking, and there's been a lot of research on it. I think maybe we could switch from 2 to 3, or 2 to a range that included 3, but 4, 4.5, that's a level of inflation that people are noticing. And when people are noticing inflation, that's a problem, and people don't like it. Moreover, if it's 4.5, you go into the next recession, you respond in a way that takes it to 5.5, et cetera, and inflation expectations go up, it becomes that much harder to bring down. So I'm not a 2.000 person, but I'm not a 4.5 person either.
How do you sort of think about, basically what policymakers here are grappling with, which is you have historically low black unemployment. I think in particular is something the Biden administration is incredibly proud of, thinking a lot about. How do you bring down inflation without sending broad unemployment, black unemployment right back up?
Yeah. The benefits of a tight labor market are well known and they're on display, but they come with risks. I think what we'd be remiss not to mention is that a soft landing, a first stage of it, let's call it that, a first stage of a soft landing, I think is playing out. It's been 10 months that it was widely declared impossible, theoretically, empirically, to see labor demand ease without pushing up the unemployment rate. And yet exactly that has happened. So it's like 9-10 months into that process, we've lost about 2.5 million in terms of labor demand, and the unemployment rate is exactly where it was before. Meanwhile, wage growth has also rolled over, not enough, but it is lower. So there is a beautiful rebalancing going on, and I think it's important to acknowledge that. There is no guarantee there will be stage 2 and stage 3 of that. The risks are very high that this will not succeed. But I think we are seeing the benefits, and we're seeing the rebalancing in an impressive way, in my mind.
If you want some disagreement, I'm happy to
please,
address
disagree.
that. Otherwise, if we don't have time,
go right
I'll
after.
refer people to my
Do it.
Twitter thread from earlier today. I think
You're just not allowed to quote your own tweets.
yeah, as I was saying at Davos. No, I'm just joking.
That is worse.
I think there's some moving goalposts. I'm not saying you're doing this deliberately. I think there's some moving goalposts going on here. If you look at what the forecasts were for inflation in the first quarter of this year, as recently as February, the forecast was 3.8. Most of the forecasts earlier had been numbers even lower than that. It just came in on a quarterly basis comparable to what I just said at 5. Way above what we thought even 2 months ago. And last year, inflation was really high. But we always knew, everyone, even the worrywarts like me, knew that some of that was transitory. There was this Russian invasion of Ukraine. Everything went skyrocketing. We knew that as that went away, some of that higher inflation would go away. And less of it's gone away than anyone thought. And so in that sense, I don't think things are playing out much better. And I sort of wouldn't revise my inflation model, because the inflation model always has an error term. And if you're just ex post saying, oh, the error term was different than I said in my model, but my model was correct, you should be a little bit suspicious. But when somebody 9 months ago is saying, hey, the error term right now is positive, and here's why 9 months from now it's going to turn negative, and that's what actually happened, I'd have a little bit more faith in the model. Not that I have that much faith in any model, and I try to think it through a variety of them, but I wouldn't throw it out.
Philipp, you wrote a very long, very thoughtful, complex piece in Fortune, which the headline writer reduced to something like, actually recessions are really good. And I don't mean to put that exactly in your mouth, right. But I'm curious, if you can sort of play that argument out a little bit. Why are you optimistic even in the face of what could be a recession here?
Look, I think this is sort of the redux work of fitting it into a catchy headline. I think what the piece referred to was, we have an inflation problem, a crisis, if you will, and the question is it cyclical or is it structural? So, that in itself was a story that was reduxed into, are we going back to the 1970s or not? And I never thought we were, and I didn't think the risks were particularly high. It's very stressful. It's a very stressful moment. But what we were referring to is, if your concern is a structural break in the inflation regime, of which there is scant evidence, long-term inflation expectations have barely moved, survey data on consumers' long-term inflation expectations are not elevated, and so forth and so on. Ultimately, if that is the fear, a recession is what would reset such higher inflation expectations, which we haven't seen. So I think this is where this comes from, where ultimately if you do end up in a structural risk moment, that's when you need the recession, but I don't think we're anywhere near there today.
Jason, you've created sort of a matrix of the possible, the various outcomes here. How likely, are we to either enter or are we already in a recession? Just to, in a very basic sense, answer that question.
Right. When I try to think about the world, I break it down into conditional questions. If the unemployment rate is 4, what will inflation be? If the unemployment rate is 6, what will inflation be? I'm not saying I know the answer to either of those questions, but I can make some progress on it. And then I ask the question, will the unemployment rate be 4 or will the unemployment rate be 6? I have more faith, not that much faith, I don't want to overstate it, but more faith in the conditional views of, if you tell me the unemployment rate, here's my narrative, and those conditional views are, if the unemployment rate stays where it is, probably inflation isn't going to come down much below 3.5. In terms of the recession probability, to be honest, and maybe I shouldn't confess this, my probabilities are usually like the last person I talk to. I just repeat what they told me. It sounds sort of convincing. And so I changed my mind on this one.
Who was it and what did they say?
It was Philipp, so I'm feeling good about it right now. No, I tended to be on the low end of the recession probabilities because I think there's a lot of demand. I had thought people were going to run out of their excess saving, and you had this Wile E. Coyote moment where all the spending they're doing wouldn't be supported by the income. But their income's done much better than I thought over the last couple of months, both more jobs, more pay, and more hours, and more Social Security benefits. And so I think it's possible for consumer spending to continue perfectly fine, which means I think it's possible for us to sustain this recovery. I just think at some point, if I'm correct, the Fed will have to kill it, but it can't really kill things that quickly.
And so is that above or below 50%?
Oh, sorry.
Recession?
All of that
Just to put it in
depends. I mean, if you want to do a 10-year horizon, it's 100%. A 1-year horizon, it's definitely below 50%.
Right.
And I'd agree.
Can you give me the same?
Yeah, no, I'd agree on that. If you look at consensus probability, on a Bloomberg terminal today, it will be in the high 60s. I think that's too high. Risks are higher, and they're higher post SVB, even though that crisis seems to be contained and backstopped. But I'm below 50 as well.
In terms of what could tip the economy into a recession, I guess just as a final question, I'm curious, what key, there's commercial real estate, there's energy, there's the next, commercial banking crisis. Is there something that keeps you up at night as the likeliest trigger for things getting a lot worse?
I mean, I just look at all these new media companies that were formed
Very
in the
risky.
last year.
Very risky. It's a major sector of the economy, underestimated, I would say.
I don't have anything beyond the conventional views that are mostly center around real estate in terms of sector. But you may have more sectoral texture than I do, and I'm just going to repeat whatever you say the next time someone asks me this question. So help me out here.
Well, with slow growth, certainly below 2%, the vulnerability to any type shock is just much, much higher. So that's where my view of recession risk is fairly stressed. Below 50 is still very, very high. I think the financial system certainly has the ability to give us more surprises. As rates rose very fast, there was always the risk of breaking something. Did I see it would happen the way it happened? No. But can something similar happen again? Another stress point? Absolutely. Even if the Fed moved very, very fast and adroitly to contain what we last saw. So I think the system is opaque. It's basically intransparent. It's complex. Something else can break, and I think that's where some of the risk lies and lurks.
How much of what we are experiencing, looking at, has been about energy, and particularly been about the shocks that came out of the war in Europe?
Very little. We had in 2005, energy went up, I can't remember, 30-40% in a year, and we had core inflation of 2%. Energy shocks, the headline inflation, yes, was a big deal. But in terms of bleeding into the other stuff, in some ways it drives stuff up, like the price of jet fuel. But also when people can't afford things, they buy less of stuff, and so other prices go up less. And so the net effect isn't that big. Over the last 12 months now, energy prices have actually fallen. And so we're in this position where core inflation, the underlying thing, for the first time in 2 years, is actually higher than the headline number. So I think people who thought this was all Ukraine invasion were really missing this deeper structural thing going on in the U.S. economy.
Well, on that basically cheerful note, thank you so much for taking the time.
Thank you.